Welcome to the spring market update. This is your April market update with just an absolute ton of stuff happening in the world of finance and real estate. We're going to start with the chart of the VIX. This is the Wall Street Fear Index. You can see it spiked. This is a 5-year chart. We spiked the highest it's ever been in the last 5 years. To take a look, zoom out a little further, we touched almost 50. The last time we've seen fear index levels of this magnitude have been during the peak early COVID months, and then this is the great financial crisis 2008 and then the ensuing Brexit events. So we're kind of up there on the 20-year horizon with a lot of macro fears at the moment. The one thing we typically see is that once fear is at high levels, it usually will subside quickly thereafter. So I think we're kind of in that depths. We don't know if the lows are in on the stock market or not, but would not be surprising if it did subside. And the rest of the year is about rebuilding confidence and investor confidence. So that was one thing we're using to set the stage here. This month is looking at that index. However, a recession does not mean falling real estate prices. That's something that's kind of counterintuitive, but here's the last 6 recessions. Real estate price appreciation. You see, the only time it really ever went down materially was the 2008 recession, and that being 19%. However, other recessions have actually seen prices continue to go up, and that is what economists are forecasting right now, because we have a lack of supply nationwide, 5 to 7 million homes short from what's needed. So major forecasters are looking to a 3 to 4% appreciation year in the real estate market. What a recession does mean historically is falling interest rates. So again, counterintuitively, we are looking at this as an opportunity for the real estate market because we have all been wanting to see lower interest rates, and that's what we've gotten out of the last 6 recessions. When you take a look at the 6-month interest rate chart, you can see we've been bouncing around between 6.5 and 7 and quarter. We did experience a 6% rate last September, and the market took off like a rocket ship. So if we did see a percent reduction in rates, we do expect things to pick up, even if there is that uncertainty out there in the stock market. The folks who are buying are worried about that and are focusing on their monthly payment. The Beacon report is out, and we are seeing an uptick. Days on market going way down as we expected. Home prices are up a little bit. Number of closings is up huge, and we're still sitting at 3 months of inventory. Take a look at each of these charts here. The MLS data, this is for active listings. We're seeing more listings come on, which is great. Typical of the spring market. Median days on market's lower for active listings. It was in the 85 range. Now we're looking at 52. About half the homes on the market have changed their price by a little under 5%. Looking at the median home price, it's up a little bit. This is kind of where we've been, guys, over the last 2 to 3 years. It's been this little bit of a slog of a market. It goes up, it goes down, it goes up, it goes down. Pretty stable on the price per square foot metrics as well. We are looking to see this number kind of increase a little bit as we get into the busy season. Inventory, 3 months. So we're watching very closely. Would love to see this get back up to 4 months to give buyers a little more choice. However, having the 3 months here is still a lot better than we had seen in the last few years. So it does feel like there's a lot of homes to choose from. And then here's our favorite chart, days on market. Look at this, doing what it's supposed to do. See, last year it went from 40 to 20 to 10 in April. The year before that it went from 51 to 13 to 10 by April. So here we're in the same type of situation. I'm curious to see if this actually gets down to 10 days on market this year, or if it's more like 15 or 20 or what. It'll be interesting to see. Or does this macro uncertainty cause this number to go up? We'll find out. But what we're seeing on the field is that homes are still selling that are priced right, and now is kind of the ramp up busy season. Bottom line, start your engines, everybody. The spring market is here. Sellers want to list now before the seller competition hits up. I can tell you there's a lot of folks who were listed last year who are going to come back to market, and so there are going to be sellers competing. One thing we're noticing this year is the prices are a little less aspirational. Last spring, sellers came out with these huge prices. They didn't get them. This spring, people are seeming to price their homes a little more realistically on the margin. Despite higher interest rates and the macro uncertainty, we are seeing buyers out in force. Sellers are preparing to transact again, so get in touch with your agent early to plan for success, plan your strategy for the year. if you or anyone you know has a situation they want to consult on, myself or any Ben Relo agent will be happy to help.